So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Hi, everybody. Brett Swarts, Capital Gains Tax Solutions. I'm excited about our next guest. His name is Jason Habeeb, and he is a real estate professional, but also not just selling houses. He's also helping people with capital gains tax deferral. In particular, he's using what's called the CRT. It's known as the Charitable Remainder Trust. It's a way to defer capital gains taxes and essentially be able to fund charities of your choice. A really powerful, proven strategy, which we love here at Capital Gains Tax Solutions, especially if you are 100% charitable. So take a listen to this episode now and enjoy the show. Welcome to another episode of Capital Gains Tax Solutions podcast, where we believe deferring capital gains tax and having a plan when you sell your highly appreciated real estate or business is the best way for you to create and preserve more wealth. I'm your host, Brett Swarts. In each episode, I'm joined by some of the top financial experts, real estate professionals, and to discuss ways in which they help their clients and how they strategize and really bring value to their clients through their services. And so our next guest is a rock star. He is not only a prior professional golfer, but he also sells residential real estate here in Northern California and has some experience also with the tax deferral strategy, the CRT, helping educate, especially in the Bay Area, folks who are challenged with capital gains tax. So I'm excited to dive in with our guest. Please welcome to the show, Jason Habeeb. Hey, Jason, welcome to the show.
Yeah, thank you for having me, Brett. Glad to be here.
Great. And you can reach and find Jason at HabeebRealEstate.com. That's HABEED realestate.com. So Jason, would you tell our listeners a little bit about yourself and share your current focus?
Yeah, no, thanks. So I specialize in residential high-end luxury listing in the Bay Area and the Sacramento areas, focusing on charitable remainder trust as a tax exemption strategy for when somebody's looking to sell an investment property or a primary residence. So that's kind of what I focus on. I've been doing real estate now for 5 years. I connected with an estate planning attorney and a fiduciary here in California that kind of taught me the ropes, and we travel all across California doing these seminars and teaching our clients on how to save money on taxes and put more money back in their pockets.
That's amazing. I appreciate you sharing that. Tell us a little bit about Jason growing up. Like, who is Jason growing up? Beyond just, maybe the golf or the hard worker or the, persistence, what gifts were you given and what strengths were you given? I think we've all been given certain gifts, but what particular maybe gift or strength were you given? And how does that help you help your clients today?
I think it's having the servant's mentality. It's learning clients' goals and going after what they want, right? And every client's different. Everyone has unique goals. But growing up, my dad really taught me what hard work was, but not what smart work was. So I knew how to work hard, but not learning on how to build my own business. He was an employee his whole life. And for me, I had a bigger dream to open up my own business and add value. So that's where I found my happiness per se. But I had some good morals set by my father who taught me how to work hard. But as it relates to real estate, going back then, I went through 17 different jobs in high school. Was a professional golfer, as you mentioned, and that kind of opened up the floodgates for me as far as opportunity, as far as what I wanted to do. I found out what I did not want to do, but I enjoyed customer service. I was working in restaurants, at Chili's, Olive Garden, different various restaurants, and learning on how to serve the client. Obviously, the client was somebody who was ordering food from me, but I just kind of translated that into real estate, and now I deal with multi-million-dollar properties.
Absolutely. We're always selling and serving somewhere, someplace, somewhere. I have a similar background where I worked at Cheesecake Factory for a couple of years and learning how to serve food and connect with people through dining, which is an amazing opportunity to learn on any level. And so tell us about the professional golfing. That's kind of cool. So when did you know you had a gift for that? And what was that journey? Maybe it was in high school. When did you start playing, and walk us through that journey?
Yeah. So it all started in 7th grade. My buddy across the street from me was like, hey, him and his brother were golfing. He invited me out one day. My parents lived in a neighborhood that backed up to a local golf course here in Sacramento. And so we would sneak on as 13, 14-year-olds, play a few holes. And I just fell in love with it. I just loved how it had a lot to do with life. And now looking back at it, 15, 16 years later, that, hey, you could hit a great shot, but it's still not might work out, just because you hit a great shot just depends on where the ball bounces. And it's really a game of inches. I think that has to do with a lot with life, but I kind of related it to that. It was all on me to perform. I wasn't relying on a team per se, like a baseball, a basketball, as you're familiar with, so it's just one of those things to where I do my best when my back's against the wall, and golf really kind of taught me that. So I kind of fell in love with it. I played all 4 years in high school. I turned professional right after high school. I had a chance to play for a local community college, but it didn't work out very well. I chose to go professional instead of probably taking that right direction, playing at the collegiate level. But I had a big head back then, and it was just one of those things where I thought I could do it. I played in a few events. I placed in the top 3 in a few. It was the Pepsi Golf Tour. If you guys are familiar with that, it's one step under the Nationwide or the Web.com tour right now, which would have got me to the PGA. But God had a different plan for my life, and I just kind of rolled with it. I got a job at a local country club here in Sacramento, and I met some of the top real estate agents who are now my mentors, and a lot of them are my clients now. So it's actually cool to kind of see how everything kind of went full circle on that.
That's amazing. Thanks for sharing. That's so cool. The different paths that God leads us down, and the different opportunities, but obviously the lessons we can learn, especially through sports and athletics and being challenged. So I'm curious, Jason, when did you become fascinated and or obsessed with helping others, really achieve, whether it be financial freedom or, buying a home of their dreams, or, really helping people with their finances as it relates to real estate?
So actually, it was a family matter. It's one of my first transactions. It was in San Bruno, city outside of San Francisco, and it was with my uncle. I was selling his house that he's owned since 1982. He's a single guy. It was his primary residence, and this was before I heard about a DST or a CRT. And he's always like a father to me. When we lived in the Bay Area, we lived there, and he allowed my parents to save up enough money to purchase a home here in Sacramento. I've been here almost 20 years now since then, but I'll never forget what he's done for my family. So when it came time for him to follow us to Sacramento, and when I got my real estate license 5 years ago, he let me list his house, and we sold it for top dollar, 100,000 over list price. Bay Area market still booming. It was booming back then, but what I didn't know was how to save him money, because he was only exempt for 250,000 for the state exemption tax as a single man. And so he had to pay capital gains tax on the residual up to $1 million. So he bought it for $100,000. So he's paying about 35% state and federal capital gain tax on that difference between 350 and $1 million. So hundreds of thousands of dollars, which is his hard-earned money that he worked 60-hour weeks. He owned a grocery store in the city, and it was just, he worked by himself, didn't have any employees. And he just didn't really, he's just old school. He didn't really trust anybody. And so he worked his butt off. And, all that money that could have been in his retirement to supplement that went to Uncle Sam, right? And so it was on my heart to kind of research, hey, like I need to save my clients money. And that's how I could add value to my clients. And so I did a bunch of research. I got really connected with a fiduciary who has 35 years plus experience in this field, and also an attorney, estate planning attorney. And together it gave me the idea of going out, because there's a lot more people just like my uncle that need our help and our services. And what more value can you bring is by putting more money in their pockets. So
Well said. I couldn't say it better myself. You know, we can help people escape feeling trapped by capital gains taxes and keep more money in their estates and their families, so we can give more or support our families more, rather than to the government, who wastes it away pretty quick. To me, that's always a
exactly.
win. Always a win. So, shifting a little bit here, curious about maybe the biggest mistake, and maybe you kind of already talked about it, that you or a client has made in regards to capital gains tax. Maybe that was the story. They didn't know about something and they ended up paying all the tax, or it could be like a failed 1031 exchange. Does anything come to mind beyond the story you just talked about?
Yeah, I mean, there was a gentleman that we met with after our seminars in the Bay Area. He had about $20 million worth of property, and he had his financial advisor, he had his attorney there, he had his CPA there, which we all recommend, for our meetings with our clients, just to get a different opinion. But a lot of these guys, had been with this individual, this potential client, for 20, 30 years, and they have developed a trust, but they never heard of a DST or a CRT. And, so when we're talking about it, they won't tell you what they don't know. And so they don't want to make themselves kind of feel like that they didn't know to the client that they've been servicing for 20 or 30 years. So in my opinion, I think it could be considered malpractice if you don't give the alternative to the client. So that client ended up choosing the advice of his trusted colleagues of 20 or 30 years, and didn't go with my attorney and my fiduciary and my services, and ended up paying. I followed up with him, and he told me how much he paid for capital gains taxes. And he said, "Hey, Jason, I appreciate you guys setting this appointment." He could tell he was pretty teed off on that, but woulda, coulda, shoulda, and all we could do is just add value and get in front of as many clients as we can, and see what we could do for them.
Yeah,
In the end,
unfortunately, it's a common occurrence, right? And I liken it to a healthcare professional who's you've gone to all your life, right? And they're your primary physician, your family doctor, and you develop a connection and a trust, and they've been there for you to help you with your whole life, for all of your health and all of your family. But then all of a sudden, you need to have brain surgery or knee surgery or shoulder surgery, something that's very specialized, and just because the family practitioner has never done the surgery before doesn't mean it doesn't work and the surgeon hasn't been successful, which really the question becomes, what are the main questions you should be asking to make sure that you're comfortable with whatever structure you have moving forward, even if your primary CPA or tax attorney or estate planning attorney doesn't know about this specialized service, such as the deferred sales trust or a charitable remainder trust or Delaware statutory trust, or even a 1031 exchange. And most people know about a 1031 now. And really the question has become, what is the tax deferral strategy? What's it based on? What section of the tax code is it based on? The next question is, well, how many of these have been done, right? A couple. How long have they been doing it for? Have they done thousands of them? How many IRS audits have they survived, right? So just like you would ask a brain surgeon, hey, how many surgeries have you done? How many patients died? How many patients went to jail, kind of thing? You want to know what the track record is. And as soon as you have that evidence and that track record, then you can make a decision based upon, hey, I'm going to pay $1 million, $2, $3, $4, $5 million in tax, or defer it all. That's the important questions to ask. And when you can ask those, especially if you can pre-plan, do it today, rather than when you're in 30 days to close and it's the heat of the deal and it's a lot of emotions going on. Pre-plan, right? Get there early, because the key is once you close and escrow is over, it's over. The funds have been sent to you, the tax is triggered, and you're going to pay that tax. So the key is to pre-plan and ask the right questions. So after helping countless investors, Jason, and clients with real estate and different needs, I'm curious, what are some of the, maybe the one or two things that you found to be the best way to create and preserve more wealth?
I would say just it's timing. It's timing. It's like you mentioned, going over pre-planning, going over goals, and asking the right questions. I think that is so key for my particular clients when it results in the sale of a property or investment property. Is, hey, tell me about your goals. Tell me about your timeline, because it's very important to understand that as far as a marketing strategy as a real estate professional, to know the competition, to study the market, to advise accordingly. It might be better for them to wait, or it might be, depending on what's available with current inventory, current buyers, current rates. These are all questions that I ask my clients. And in the end, it really helps their bottom line because we can better strategize a marketing plan for them to help them get the most amount of money and net it and save money on the capital gains tax, whether it's through a DST or a CRT, whatever strategy they really need to have this done months in advance in order to better prepare for that sale of the property, if that's the direction they want to go.
As a reminder, listeners are listening to, we have Jason Habeeb on the show here at HabeebRealEstate.com. You can find him. He helps people in Northern California sell high-end primary homes and also has some experience with the CRT, Charitable Remainder Trust. So, Jason, I consider you a wealth advisor. And so I'm curious, what should every other wealth advisor in different industries, such as maybe financial advising or a business broker or commercial real estate syndicator, what should they know about your services and how you work with your clients, and how could they best work with you to help the client for all of their needs for real estate?
So absolutely. So basically, we're a power team. The financial advisor, the attorney, the CPA, we're all in it together. We're all here to work together for the best services for the client, to help them through this process. So I'm not a licensed attorney or financial advisor, but I do study that field just to better serve my clients. But I always defer it over to my trusted advisors on that. But we all kind of need to understand where the numbers are in regards to the property. And it all starts with myself evaluating the property and then giving that to the attorneys, giving it to the financial advisors and the CPAs to see if it's really going to make sense for the client. So we're always constant communication back and forth with each other and kind of strategizing the best way to do that. So in the end, the client gets not just myself, but all four of the professionals that are involved in the transaction.
To that point, I think you mentioned you have a nice list that you've compiled. Maybe it's called like a blacklist of all the best of the best that you've worked with in different parts of the industry for different clients' needs. Maybe touch a little bit on what that is and how that helps your clients.
Yeah, absolutely. So I'll give a shout out to Kent Meyer at Traditions Law Firm in Rockland, California. Kent has 45 years of estate planning expertise, but he's really the one who kind of sat me down and shared what this charitable remainder trust is and how it's helped save his clients millions of dollars in taxes throughout the years. But he's got a PhD. He plays hockey. He's 75 years old, and he works out 5 days a week and owns. I don't know how he has this much energy. He comes with me to seminars. I really look up to him as a mentor. But it's really, he is one of the main reasons why I kind of had this passion to help my clients and to save them money, because I saw the opportunity, what he was already doing, and partnering with him, doing these seminars all across California through the Apartment Owners Association, where they specialize in investors, dealing with those type of people that maybe came to America in the early 60s or 70s in California, and they bought all these different properties as their retirement, and they're tired of tenants, toilets, and termites, right? The 3 T's, and they want to get out, but they're scared because they're really house rich and cash poor because it's all in their house, and they're looking for these strategies to exit their property and maximize their retirement, just like how my uncle was. He was an immigrant from the Middle East, and he came down and he worked his butt off. Unfortunately, he missed out because I had no idea about this when I first sold his property. So that's what kind of enlightened my heart to really focus on this and to partner with the right people to refer my clients to.
That's great. I appreciate that, Jason, for sharing, and what a legacy that to have mentors like that, right? It makes us want to be those mentors for somebody someday. Absolutely. When we're 75, hopefully playing basketball or golf and helping people at seminars. So you ready for the lightning round?
Absolutely. Yeah, let's do it.
All right. So favorite book you've read in the past 6 months?
Can't Hurt Me by David Goggins.
Your favorite podcast maybe you're listening to right now?
Joe Rogan, definitely. He has multiple great ones on his, yeah.
Yeah, best golfer of all time.
Best golfer of all time? Oh man, I'm Tiger Woods.
There it is.
Absolutely.
Let's see if best place to visit in Northern California. What's your favorite spot to vacation?
I would say Bodega Bay.
Excellent. That's the end of the lightning round. And now the last question, Jason. Here we go. So, how do you stay centered in your values and stay encouraged to charge forward to reach new goals?
So I think it has to do a lot with my faith, being rooted in God and relying on Him and not my own strength to do what I do. Real estate is very stressful. I'm 28 years old. I have gray hair. You can't tell right now on camera, but there's some gray hair. And my first few years of real estate, I was really burning out, and having organization and a balance with faith and hard work and working smarter, not harder, I think has really been the key to balance and to increase my business and allow me to have more personal time with my family and friends and travel and still ramp up my business and serve my clients. So that's the biggest key.
Love it, Jason. Thanks for sharing. Thanks for being on the show. It's really been a pleasure. And for our listeners, again, you can reach Jason at HabeebRealEstate.com. It's HABEED realestate.com. He's also on Facebook, Jason Habeeb. Hey, Jason, thanks for being on the show.
Thank you. Thank you, Brett. Thanks for having me. Take care.
Excellent. Hey, and I want to thank all of our listeners, too, for listening to another episode of Capital Gains Tax Solutions Podcast. As always, we believe having a plan is the key to having a tax deferral strategy that works for you and getting clarity on what you want to use. It might be a charitable remainder trust if you're 100% charitable. It might be a deferred sales trust, a 1031 exchange, a Delaware statutory trust. There are legal loopholes for you to take advantage of, but if you don't take action and get a plan and get your trusted advisors to rally around that plan, it's going to be very difficult to execute when you sell your highly appreciated primary home, business, or commercial real estate. I'm your host, Brett Swarts. Thanks so much for listening, and we look forward to seeing you next time. And in the meantime, go take some action on all of this content. All right. Thank you so much for listening to the show. A couple show notes. Jason Habeeb, his website is HABEEB realestate.com. That's HabeebRealEstate.com, HABEEB realestate.com. So I love the fact that he took not only inspiration from his grandfather who paid a bunch in tax, he took that story, he took that challenge, and he turned it into action to learn about the CRT, the Charitable Remainder Trust, to help clients to defer capital gains taxes using that strategy, right? So he's not only a real estate agent, but he's also someone who's focused on helping people with charitable causes and deferring taxes, kind of a win-win for everybody. That is a great strategy, a proven strategy, which we like here, especially if you're 100% charitable. Take a look at Jason, especially if you're looking to sell a house, buy a house here in Northern California. He's also a part of my personal mastermind, and we are connected very well here in Northern California. So I hope you like the episode. Share it with any friends and family who might be of benefit to them. And thanks again for listening.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.